Warren Buffett says that rule number one of investing is don't lose money. And rule number two is don't forget about rule number one. So whatever you invest in, minimizing or reducing or eliminating losses is so important. Now, this is an interesting time. If you're involved in some multifamily deals that are value add deals particularly, you may see some troubles. We're seeing rates rise. It's hard to find new deals that pencil. Even now in single family, we're seeing it. A 7% interest rate or higher is very different than a 3%, right? So it's a very interesting time. So how do you play defense with your investment? That's the best thing, right? The first thing is protect your capital, right? Capital preservation. The second thing is capital appreciation. If you can't protect what you have, you're not going to be able to see an improvement. It's like if you watch football, it's protecting the football, right? If somebody turns the ball over, usually the team that turns the ball over most loses. It's the same like with investing. If you have more losses than you have wins, it's a pretty easy equation there, right? So we're gonna jump into this in 3 simple steps. You're gonna love it. Let's go for it. All right, quick intro. My name is Bronson Hill. I'm the CEO of Bronson Equity. We've got over 200 million in multifamily assets. We also have ATM machines, car washes. We help investors like yourself get predictable passive cash flow outside of Wall Street. So you can check out our information below, bronsonequity.com, and join our investment club. So the 3 things I want to talk about, first one is about identifying the enemies of losing money, right? There's an enemy out there and multiple enemies that want to take your money from you. They want to snatch it out of your paws and put it in their hands. And the first thing is losing money, right? So you can find deals that just end up being bad deals, where the deals go bad. It may not be, looking at it, everything looked good on the front end, but the more experience someone gets, it's so important to understand what are the primary 1 or 2 ways that I could lose money on this deal. And that typically comes through experience. If you're newer to investing, looking at a lot of deals can help. Going to meetups, meeting other passive investors, going to conferences, that can be super helpful because they can really fast track that for you and let you even share their experiences of how they lost money on a bad deal. The second thing is bad operators. There are people that are just typically new operators or people that are just bad actors. And that's, again, we're going to vet people. We're going to try to get references. We're going to try to make sure we really understand who we're working with because there are a lot of bad operators out there. And so, we want to try to avoid losing money. So that's the first thing we really want to look out for is bad deals, bad operators. And the second thing is inflation. Now, a lot of people are not as concerned about inflation. Oh, it's only 3%. I'm of the belief that it's around 8 to 10% still, and it's going to perpetually be an issue. We're actually continuing to see money creation, currency creation, I should say, since the fall to January of 2024. The national federal debt has gone from 31 trillion to 34 trillion, right? So we're just like a trillion a month. I mean, we're spending like there's no tomorrow, and that's only going to continue, and that's only going to continue inflation, which is crazy. So second one is inflation. Don't wait too long. Get invested. Your money is stolen just simply from inflation. So make sure that you are invested or have money sitting where it's making money for you, even while you're waiting. There's some shorter midterm investments as short as 90 days or less that you actually can start making money, or even treasuries can help you that way. Third thing is outside forces. There are black swans, which just means an event that is unpredicted. It's something you can't predict. COVID was one. We have other things happen. Maybe there could be some big recession, or 2008 was a black swan. But there are things that are going to happen, and rising rates is also another black swan. We didn't see that it would be the fastest rate increase in 40 or 50 years, and so that was a learning experience. But predicting, not necessarily what is going to happen, but that something is going to happen, and so that if you can have some liquidity available, if one of your deals struggles, or if you have some money around that, hey, in this situation I'm diversified enough, just knowing that things are going to happen. And so that's where it can help you. So that brings me to the second thing is diversify, and then with a caveat, which is somewhat. So don't diversify a ton. I know some people that are in more than 50 deals, and that's a full-time job. You're in 50 deals. Just to manage that and keep track of that is basically a full-time job. So be passive. Don't do too much. 10 to 12 deals is enough. If you're like me, maybe you're pretty strongly invested in multifamily like I was. I'm doing a lot more other alternative things now, which I'm really excited about. And Buffett says this about diversification. He says, wide diversification is helpful if you don't know what you're doing. So again, that's why the most diversification you can have can be good for somebody if you just really don't know much about it. But if you're watching videos like this and you're learning and you're reading, you know something, right? So I think that being less invested, maybe having if somebody's got $1 million to invest, spreading that around among 10 different deals is good. Or if somebody's $10 million, putting it in 10 different deals, $1 million in each deal, that's not a bad idea, right? And again, your situation is different, so no advice there, but don't diversify too much. Don't be too diversified, because too much diversification, it will hurt your returns, because you'll have some winners and you won't be able to really be fully invested as much in those, and you just will have trouble keeping track of it. The third thing that I would say is really important when it comes to a great defense. And if you watch football, they say that the flashes in the offense, but the defense is really what wins you championships. So due diligence. Due diligence really is a big one. And I really say the best for last year. It really is the most important thing. It's the most important thing you should do, taking time to get to know the group, asking around with other investors, operators, things like that. Just learning, what are the questions I should ask? We have a special sheet that's 20 questions that it's a PDF. If you'd like to get that, you can email admin@bronsonequity.com. And that has just some of the things you should ask every operator. And a lot of it comes down to hey, what didn't go well in a previous deal? And any of these deals, they don't go like clockwork. Even some of the best operators, there's always learning experiences, always things that happen. And if somebody doesn't share, hey, here's what happened, or here's, man, we would have done this different, or here's something that didn't go well, either if they don't have those stories, they're either not being honest with you, or they're just brand new and they don't have experience. Those are two kind of red flags. That's one question asked, but there's a lot of questions you want to ask. You can even get on ChatGPT. What are the questions I should ask? Or you can email us and we'll send that form to you. So kind of to sum this up here, don't lose money. Again, you're going to have a loss at some point. So a friend of mine who's been kind of a mentor said, you may do 20 deals passively and one of them may go bad. You may have a loss in one deal, but just kind of plan for it. Just plan that in a certain number you're going to, but everything you can do to minimize that and reduce the chances of that, the better. Because again, if you're having losses here and there and here and there, it's going to really eat into profits. And this is something people really don't talk about. They get really excited. Oh, I doubled my money in this, or we made a 3x return, or 30% annualized, and all that stuff is great. Well, tell me about the worst deal, right? That's a great question if you're new when you go to meetups or conferences. Hey, would you mind telling me about something that didn't go well or something that didn't go according to plan? Typically, other passive investors will share that. A lot of operators will as well. And I just love working with people like that open up and are honest about where they're at. So I want to share this quote with you. This comes from Simon Sinek, who wrote the great book, Start With Why. And it says, we can make up for lost money, but we can't make up for lost time. And I've been saying for a long time as well, you can always make more money, but you can't make more time. So make sure that in your life, you're doing things, you're investing in yourself. You're also, there's a time for money. We have spent time to be able to get that money. Minimizing losses can be good. But if you have a loss, which inevitably will happen, don't be too hard on yourself. Don't take it, just really learn from it. And the day I lost $70,000 doing options trading, when at the time it was over a third of my net worth, that was a $70,000 education. And I learned I'm not a good options trader, right? And that's okay. I can say that without any sort of shame, or just okay, I've learned that about myself, right? I'm not the guy to be doing that complex formula. There are people that do that, but that's not me, right? And besides, I know very few people that have made options consistently over time. If you make money through options or other things, stick that in the comments. I'd love to see that. I'd love to respond to that comment. So check out this interview I did with my friend Bob about investing in franchises. You can check that out up here, just some other alternatives. I love looking at alternatives to real estate to try to find ways to invest and grow cash flow. And then if you haven't joined our investment club, you can do so below. We're doing things in the multifamily, oil and gas, ATM machines, car washes, all kinds of different things. Check that out down below. I look forward to seeing you on the next video.